All right. Hello, everybody. Welcome back to another episode of the Market Close. We are live. I hate that now that I have a manager, every comment when I'm late is like, this guy gets a manager and still can't be on time. We're here. We're live. Even though it's 2 minutes late. Dude, honestly, it's not like I purposely go 2 minutes late. It's like at the end, right before you go live, something always happens, which caused me to be late. But we're here. We got a lot to talk about. Unfortunately, crypto is not cooperating today. Ugly day. Not everything is red. As you can see, the S&P 500 barely moved, 681. I mean, almost flat for the day. It was at 685 at the lows, I think, or at the high, 679 it got to for a second. The real story here is Bitcoin, 85,890. That one continues to get hit. Ethereum below 3,000. That one continues to get hit at 2934. And as a result, unfortunately, Hoodie, 114.50. That's down 4% on the day. Coinbase, that's down 7% on the day at 249. MicroStrategy, obviously, Sailor did buy another 10,000 Bitcoin this morning, 163. That's down 7.4% on the day. All your crypto derivatives, obviously BMNR also getting hit pretty bad, 10% right here, 31.41, are all down. The irony of the day is that Tesla is holding a 4% move on a day where high beta is getting demolished, and NVIDIA somehow, some way is holding a green position at 176. I mean, it is weird. I'm happy that both are green, but it's hard to make sense of why exactly they're green. It's almost like the market is rotating entirely out of tech, and we'll talk about some of the other areas the market's going to, healthcare and financials being the two biggest, but they're staying in Tesla and NVIDIA, which is just weird to say the least. Meta right there also holding a 1% move at 650. So those three are green. Broadcom annihilated today. Got to 339. Now it's at 340. Down basically 30% from the highs, 6% down on the day. Micron down 2%. They've got earnings tomorrow. Oracle cannot catch a break. That one also down 3% on the day. Netflix is down 2%. SoFi. Why is SoFi down 5%? SoFi is down 5%. Amcor is down 1%. S&P 500, again, relatively flat. Palantir as well. I put in that bucket of Tesla and NVIDIA. Not sure how it's able to hold on to its green today, but it's holding on. It's usually when you have a day like this, all three of those names, regardless of if it's warranted or not, they end up getting hit, and they're not. They're actually holding on to some resemblance of green today. Tesla being the one that's leading the pack up 5%, which is quite incredible. JP Morgan's up on the day. Lily's up on the day. Zeta's down 5%. Nebius is down 7%. I think Iren's still below 40. Iren well below 40 now, 35.53. Iren getting hit the worst in the data center space. CoreWeave is also down about 7%. CoreWeave down 7.3, 72.80 on CoreWeave. Carvana is down 1%. CrowdStrike's down 3%. Duolingo's down 5%. Adobe's down 2%. I mean, pretty much everything took a beating today. The continuation of the Friday pain is not necessarily slowing down. I don't have a headline either to give you. I mean, we've got a lot of headlines to run through, but there's not sort of one characteristic headline like the OpenAI Oracle delay that kind of caused the Friday pain. It feels just like more of a continuation. And Tesla holding 480 is very nice to see, but the rest of the market not really able to continue in that level. So we got a lot to talk about, a lot of different headlines to get into. Let me know if anyone bought the dip on anything today, or if you're looking at anything that is catching your attention. If you sold anything, sold calls, sold puts. Fear and greed, we are at neutral, folks. That's how weird this market is right now. It doesn't feel like we're at neutral, but S&P 500 holding 480 or 680 means that, yeah, we probably should be at neutral. This is not extreme fear. We don't have the S&P 500 that's down even 2% from where we were last week. Last week, we were at all-time highs and the after hours when we hit 690. Crypto feels like fear, which is hurting a bunch of different stocks. Some of the tech leaders, like a Broadcom, feels like fear, which is hurting some of the data center plays along with Oracle. But the broader market's holding on. And so, unfortunately, what this means is that you can't necessarily be mad about the market. You can feel whatever emotions you want, but you can't necessarily blame the market for this type of a heat map where lots of other sectors are picking up the slack. Amazon, I don't know why that's down 2% again on the day. Microsoft down, Apple's down 2%. You can't be mad about those names being down if the rest of the market's picking up the slack. Now, if the rest of the market wasn't picking up the slack, we would be pricing in something like a recession or something where like just everything feels like it should be falling. And that would be a much worse situation. It's not that bad, except for people that are heavily leveraged tech, which is a lot of us, which obviously ends up not feeling the best. And so I think that's kind of the story of the day. And that's why we're seeing some of the pain that we are seeing right now. Did Trump officially do the executive order on weed? Did we get that in? Is that happening? MSOS, Tesla 480. We'll talk more about Tesla in a bit. No, MSOS is down 7%. Is he not doing the executive order? Why is this one down 7%? How about Tilray? Tilray's also down 8%. Okay, I'll see if we can get news on the executive order. But that was a rumor last week. And it doesn't seem like that rumor is necessarily... Or no, that rumor, well, that's kind of weird. Trump said just now, he is live. He's talking about the Mexican cartel right now. He says, looking at order to reclassify marijuana very strongly. Wow. So those names are still down, even though Trump is saying he is looking at affirming that executive order rumor news. I guess it was priced in. You're getting a sell the news right there. Robin getting a little recovery right there from 114 to 115, but it looks like it was priced in, and maybe that's why those names are selling off. Rocket Lab right there, 55.23. That's down 10%. We got some news on the SpaceX IPO. We'll talk about that as well. But Rocket Lab, unfortunately, got a massive move last week and now getting hit by 10%. I think Rocket Lab falling here is relatively healthy. I know people hate hearing that, but dude, the thing shot up 40% in a week. Like, that's just not sustainable. I think anyone who wants this thing to meaningfully have a chance to be a SpaceX derivative play, it needs to be slow and steady to win the race. Otherwise, it's just going to go up as quick as it goes down. So it's not crazy to me to see that one going down 10%. Okay, so let's get into some of these headlines. We got about 6 minutes until the market closes. First of all, SpaceX, on the theme of what's going on with space. Take a look at this. This is kind of crazy. Applied Digital down 20% on the day. Again, all the data centers are getting hit because of the Oracle, in my opinion, OpenAI headline that has not left the market feeling jittery about data center leases being essentially a demand-based problem versus a supply-based problem, which, again, I think is incredibly stupid. We've had more than enough earnings to know that that's not the case. Nonetheless, that's how the market feels, and that's why those stocks are getting hit. Peter Thiel, I forgot how much he personally invested in SpaceX. He's expected to make $42 billion when the company goes public through the multiple funds and then personal money that he's put into SpaceX. I forgot he was one of the earliest investors when Elon had this idea back in 2008. So this will be a recovery, in my opinion, and as this tweet says right here, from the mistake of exiting Facebook too early. Now, if he had held on to Facebook, I think Peter Thiel will be worth about about 150 billion right now. I think his net worth is like 30 billion at the moment. So he would have made a lot of money if he had held on to Facebook. At the time, he said he didn't know how big it could get. He sold at, I think, 40, 50 billion. That is at almost 2 trillion. So it doesn't seem like he's necessarily going to sell SpaceX. I mean, maybe he de-risks, but my goodness. I mean, now that he's been through one of these cycles and he sees like how crazy these stocks can get in terms of the valuation, especially a stock that's tied to Elon Musk. I mean, that stock alone could make him a centibillionaire in terms of $100 billion. So that would be kind of crazy, but that is a piece of news that I thought was relatively interesting today. There is more and more chatter on the SpaceX IPO happening. Wall Street Journal reported that SpaceX is seriously looking at a variety of investment banks to underwrite the IPO, as they will be pitching the story of Starlink and data centers in space to prospective investors. So it does seem like that one is getting ready to go public. Iran right there down 11%, CoreWeave down 7%, IWM, small caps now taking a hit. They were actually up on the day. Small caps now down about 1% as we get into the close. VG down 3%, Big Bear AI down 6%. Rivian has been your safety today, up 1.6. Walmart's been a little bit of safety. Dell's been a little bit of safety. Everything else has been ugly. Google's down, Apple's down, Microsoft's down, even Warner Bros is down, PayPal's down again, 1.5, Redwire down 5.6. The Chinese stocks got hit off of some bad economic data last night in China. That's why those are down. Snapchat's down 0.5%. iRobot's filing for bankruptcy, down 72%. Their market cap is 37 million. Amazon wanted to buy them for 1.5 billion in 2022. That got rejected by the FTC, so Amazon could have taken them out, but that one will now go bankrupt. Oklo's down 6%. VRT's down. Rubrik is down. How about the quantum names? Are those down? QBTS, that's down 9%. I mean, anything high beta today continues to get hit. Applied Digital, down 17 following Friday. Cruise stocks are green. I mean, we got some cruise earnings. I also think we got cruise earnings on Friday. I don't know if cruises are going to be the best form of safety. I think they're being perceived as safety because the market's like, well, people are not going to cancel their cruises or their trips, even if things get a little ugly. And so it's like being framed as a consumer defensive, which I guess you can make that argument. But I'm not sure how much of rotation is going to happen into these cruise stocks. Year to date, Carnival is only up 14%, so it's still underperforming the S&P 500, but it has made a move over the past month closer to up about 12%. Yeah, Verizon as well. A lot of these value names holding on to a little bit of their green. We'll talk after the bell on why I think the high beta names got hit today, and why I still think that 2026 should be relatively strong for some of these names. But I mean, regardless, they are following the trend that we followed from last week. Although I do feel it's a little fake. I mean, Robinhood fell from 135 to 120 last week, now went down to 114. Like, they got a big event coming up tomorrow. Some of this stuff just feels algorithm. SoFi should not be below 26. Like, a lot of these things are now feeling like the algos are taking over, and it does feel like there's a little bit of panic selling here. So I would really be surprised if like Hood gets to like 108 or SoFi gets to 23 again. I mean, those are levels we saw at the second week of November when Fear and Greed was at 4. And we wouldn't get to 4 on Fear and Greed if we saw those levels again. But if those high beta names get hit that bad, I wonder where the market sentiment ultimately looks at. Trump just said, I didn't look at the stock market today. Maybe it's up. Well, it's not. So that's that. Trump's live. We'll get some quotes from him in a bit over a bunch of different things he's talking about. That tweet he put out today about Rob Rayner being killed because he had bad TDS, I mean, universally has been just seen as like a horrible tweet across even the MAGA base. Like the amount of MAGA accounts that I saw tweeting that it's not a good look. Like when the MAGA accounts that defend everything Trump says say this tweet was not the right tweet, you know that it was just like not the best look for Trump. But we'll get some more quotes from the press conference that he's in right now. NVIDIA right there, 176.60. That's down. Netflix, that's down 1.5%. Amcor as well, 43.94. That one holding up relatively nice, given that Broadcom is taking that big of a hit. Amcor down from 47 to 43, still up from 30 last week. So that one's actually holding okay. But NVIDIA holding its green along with Tessie at 475 on the day. All right, here we go. Monday, December 15th, 4 p.m. Once again, the stock market is now closed as we have officially started the final 2 weeks of December. That is it. We are done for Monday. NVIDIA inches out a little bit of green at 176.29, up 0.73% on the day. S&P down $1, barely moved throughout the day. It was green last night, was green in the pre-markets, was not able to hold up, ended up getting hit. D-Wave down 10%, Rocket Lab down 9.8%, Tilray down 10%. All the weed stocks, I guess, were pricing in the executive order. It already happened, so now became the sell the news. All those down about 7 to 10% on the day. CoreWeave down 8%. Iren down 11%. I don't know what specifically got Iren's down double most of the data center names, so I'm not sure why that one's getting hit that bad, but from 80 to 35 over the past 2 months on Iren. Meta right there, that was up a little bit on the day. BMR was down 11%. MicroStrategy down 8%. Coinbase down 6%. Robinhood down 3.5%. Ethereum 29.28. Bitcoin at 85.7. Tessie ends the day at its highest close in over a year. 488 is that all-time high. December 17th, 2024 is when Tesla hit 488. Right now at 475, so not that far away. Would be quite incredible. It did get to 481.77 at one point if we get back above that 488 high. Broadcom, 5.5% down on the day. Micron, which has earnings tomorrow, that's down 1.5%. Oracle, down 2.7%. AMC was down 6%. Disney was down 0.32%. Netflix got hit down 1.3% on the day. Even Palantir ended red. Is holding green for the majority of the day. Just ended red, 183.27. As that one went down. Nebius down 7%. Zeta down 6%. Cypher down 13%. Applied Digital down 17%. Why did Amazon get hit as bad today? I have no clue, but Amazon, 222, completely erasing everything from the last earnings that they had. That one as well, down about 1.6% on the day. And then you had Carvana down 1.6, CrowdStrike down 3.43, Adobe down 1.4. Where was Apple? We ended red. Apple 1.5. Google held up, but still was down 0.34%. Ugly day. Ugly day for the majority of people that are in any of these high beta names, or I guess you could even say just growth stocks in general, outside of Tesla. If you're heavy in Tesla, it has to be a fun day. But if you have a little bit of Tesla, and the majority of your stuff is not Tesla, yeah, still a pretty ugly day. Okay, so let's get into all the different headlines we got. A bunch of different stuff to talk about. I see a bunch of people in the chat did say that they either bought the breakout on Tesla or they sold some calls on Tesla, which is not too crazy. I think you got to give it another day or two to see if this breakout holds, because Tesla is just incredibly volatile. But we're going to see as we get into the end of the week. Okay, so let's talk a little bit about some of this AI coverage. First, let's play this real quick, and then we'll get into some of the AI headlines. And then we'll get into a couple of different macro stats that we saw today as well.
AI cloud investment just rages on. Other stocks tied to AI data center spending, including CoreWeave, Nebius, you can see closing both 7% lower today. Broadcom extended its post-earnings slide, closing about 5.5% lower. The stock really took a hit on reports that Google has doubled its custom chip order with competitor MediaTek for 2026. This, according to Econ Daily. Some are reading that as a win for MediaTek at Broadcom's expense. But Jefferies says AI is, quote, still in fashion in a note today. The firm named Broadcom a top pick, saying custom chip adoption is still in the early stages. They also upgraded KLA to buy, betting lower interest rates will help analog and chip equipment firms. That's why KLA closed higher today. Meanwhile, investors did rotate into areas more sensitive to the economy. You had consumer discretionary that led the way with Tesla up 3.5%, travel names like Booking almost 3% higher, Expedia, same thing. Healthcare also saw some buying interest. Eli Lilly, Baxter, Intuitive Surgical, all of these names climbing higher. Eli Lilly up over 3%. John?
All right, Christina, thank you. And it was another volatile.
So again, a lot of those tech names ended up taking a hit based on a variety of different reports, and they ended up leading the broader tech trade down outside of names like a Tesla and NVIDIA that held up. Now, why was Tesla up on the day? Tesla right there, 475. For those that didn't see it, it has been seen in Austin, a robotaxi that didn't have, not exactly a robotaxi, but a car that is functioning like a robotaxi. It's not fully unsupervised FSD yet throughout the entire state or throughout the country, but you do have it without a driver, which is a really big deal. So that not having a driver, and it started getting the industry more excited. I mean, there's no other headline outside of this right here. Maybe you've got a little bit of the SpaceX IPO getting the market excited, given what sort of interconnection there is with Tesla. But this right here is what made the market really excited. And I think that's why we saw that momentum. By the way, Elon's net worth has passed 600 billion. As per the Tesla stock increase, he got a very lucrative package over the past couple of weeks in terms of his Tesla compensation. So that right there got him to 600 billion. And then if you factor in SpaceX actually being valued at 800 billion, I mean, you get Elon that's getting very closer to that $1 trillion net worth, which is going to be kind of crazy when Elon actually becomes a trillionaire, because we know that that's going to happen. So that's what you have on Tesla and Elon. American Eagle, this stock, wow, was up 6% today. I didn't even see this one. What about Lulu? Lulu was up a little bit on the day. Abercrombie was up 6% on the day. Urban Outfitters was up 2%. Why are these stocks like, I mean, this is just confusing to me. Let's sell off a bunch of the tech names that have massive earnings growth, but let's buy the retailers, even though we're afraid of a recession. I know they all had good earnings, which again pushes back against the recession concerns, but really, people are buying American Eagle and they're selling AMD? Like, it's weird. Unless you think the consumer's fine. And if so, then that's great for the economy. But I mean, that is not the mainstream narrative, but it seems like the market is absolutely rotating into those consumer defensives. I think Celsius was up on the day as well. No, Celsius basically was flat, which is very weird. Or they're rotating into Sydney Sweeney, which is fair. But then all the other retailers are up as well. So they're betting on cash flow, not consumer. Well, if they were betting on cash flow, I mean, I still think the Mag 7 have a bit more cash flow than American Eagle. But I guess they're betting on something different than the Max 7 that also can produce meaningful results. And I guess that's what we're seeing right here. Tesla continuing to get that momentum in the after hours as well. Here is Mr. Dan Ives on what he thinks about Tessie and why he thinks 3 trillion is happening by end of next year.
Ambitions, everything they want to do is always delayed. Granted, the market cap, is still phenomenal. Why do you feel so strongly that 2026 will be a great year?
I think it's about autonomous. I mean, when it comes to physical AI, I think there's nothing better, when it comes to physical AI than NVIDIA and Tesla. And I think this is going to be a golden chapter for Tesla. When
Physical
it comes
AI.
When it comes to robotaxis, when it comes to cyber cabs, volume production, true autonomous, and of course you look at robotics in terms of Optimus. I mean, Kelly, that's why I think we're looking at 2 trillion, ultimately probably a $3 trillion market cap by late 2026, early 2027. That's why it continues to be one of our top picks.
What's the so you think about a market cap that big, you say, okay, it's high multiple. I don't know what exactly the earnings look like. What are you anticipating on that front? And how does physical AI kind of feed directly into the earnings power it might have?
I mean, when I look out next 3-4 years, I think earnings power is 4x, 5x. But because it's my view that when you think about not just the FSD piece, but in terms of true autonomous, it's going to change the whole margin profile. It changes the whole growth story. And I think just going forward for Tesla, the focus, it's okay, deliveries, they matter. Of course they matter. But in terms of the next few years, especially Musk now, wartime CEO, in terms of pay package, as that's already cemented, this is just the start. And they're also going to have an ownership of XAI.
Mm-hmm.
You look what's happened in SpaceX. I mean, I think we're now talking about this next AI chapter that's happening across the Musk ecosystem.
We had Dan Primack on last week, and he said, I basically asked him, or he said the question to ask is, why is SpaceX going public now? Do you think there's anything related to financial pressure on Tesla or Musk or anything like that? Or is it a political? Why would 2026 be the year for SpaceX?
I think the time's right. I mean, you could argue valuation, right? Does it approach $1 trillion? It's the same reason why does Anthropic or ultimately when you look at OpenAI and others. I mean, we're hitting at a point where it's only year 3 of an 8 to 10 year build out in terms of the AI revolution. And for the first time in 30 years, I mean, you've talked about this, US is ahead of China when it comes to tech, but SpaceX is an inflection point. I think it's important that it goes public. It's the right time. And look, we are in, I think, 2 more years in this tech bull market, and we're going to see more and more of these great private companies going public.
Okay, so Dan Ives calling for 3 trillion by the end of the year, or by the end of next year on Tesla. That would essentially, Tesla's at 1.5, right? A little bit above that, so that'd be a double. Tesla, yeah, 1.5. So he's calling for essentially a $900 stock by the end of next year. Obviously anything is possible, but I think that earnings growth would have to meaningfully pick up next year, and as per Elon, it's probably not. So I guess we're gonna have to see going into the end of the year if that plays out. We got 2 headlines after hours. PayPal applying to become a bank. Bloomberg says as the US loosens regulatory reins, PayPal is now applying to become a bank. Trying to become a bank. So they're going to be applying for a banking charter. The stock is flat after hours. I don't know if this is the solution to PayPal's issues. I mean, it just seems like more and more regulation is going to be put on them if they end up having a banking charter. They'll still be able to keep their crypto now that the United States is allowing banks to allow people to trade crypto. The move would allow PayPal to have lending, hold deposits, and deepen its role in financial services, tightening competition with traditional banks and fintech fears. I mean, they're doing buybacks, paying a dividend. At this point, applying to become a bank, it kind of makes sense. Like, why wouldn't they go for being a bank if they're starting to do all the things that traditional banks do? I don't know. Lending, yeah, I guess that's an argument. I don't know if people would actively have a checking and savings account in PayPal in a meaningful way. Definitely some people will, but not sure if it's going to be massive. Ford right there is up 2% after hours. The reason Ford is up, you got a couple of headlines right here. Ford is going to take a $19.5 billion charge off in their EV business. And Ford is going to stop making the EV version of the F-150. So Ford is essentially after hours telling everybody we are giving up on electric vehicles. They're not making the premier EV. that they were focused on, and they're taking an almost $20 billion charge off. Again, market cap of $54 billion. So we're talking about almost 40% of the market cap they're writing off right now. That stock pushing up higher at 2%. Ford has actually been a phenomenal investment this year. I mean, 41%, massively outperforming the S&P 500. And I guess this administration gave them the cover to be like, we don't need to worry about EVs anymore from an environmental or regulatory perspective, because the administration is not going to force people to focus on EVs. Yeah, GM is also up 50% year to date. GM and Ford, massive this year. Tesla's up about 18%. So Tesla's still beating the S&P. The GM and Ford also ended up beating Tesla by a hefty margin. All right, so those were the headlines with Ford and PayPal. Yeah, a lot of people saying, "Oh, they quit EVs, no surprise." Yeah, I mean, this is really not surprising, but the fact that they finally just did it, I think, is where the market gets happy, because they were expecting this for a while. All right, Mike Wilson, let's hear from him. So we heard Tom Lee's perspective for next year, which is 7,700, even if we have to have a bit of a drawdown before we get there. Here's what Mike Wilson has to say, and then we'll analyze his thoughts on 2026, along with the state of where he thinks the current AI trade is going.
What do you see then for 2026?
Hey, Brian, how are you? I think, the call for 2026 is just a continuation of our call this year. I think, as you pointed out, I mean, we're going to end up a little bit above our target for this year. The one thing we didn't do that most did was we didn't, capitulate in April. I think a lot of folks took their targets down. We stayed with it because our view coming into this year was that the administration would do the growth negative stuff first, and that would turn into a tough first half, second half being quite good. And that's exactly what's played out. It was a little more dramatic than we would have liked in April, but I mean, that playbook is working. And so now for 2026, we're going to see, more of the good news effects of the fiscal policy. And now, of course, the Fed getting on board to be supportive of this sort of run it hot strategy.
Yeah, talk a little bit about that run it hot strategy, Mike. That caught my attention.
Yeah, no, I think we were first ones to talk about this. This goes back really to 2021. This isn't a new feature. And I think, in fact, the last administration was trying to run the economy hot too, but with a different strategy on how they would do it. And the Fed has to sort of acquiesce to that plan, because the only way we're going to grow out of the debt and deficit issue is to basically run the economy hot, which means not only getting the growth better, but also getting inflation higher. And the Fed has to be tolerant in that process. And I think they were tolerant in 2021. Obviously, they were late to kind of raise rates, but of course, then they had to react to high single-digit inflation, and then 22 was a tough year. And now we're in the same situation, I think, that we were in 2021, which is we're going into a year where inflation is going to be accelerating again, which is very, very good for earnings growth, which is where we're out of consensus now. And it's okay for stocks if the Fed is being supportive. It's not okay for stocks if the Fed is, hiking rates or tightening policy like they were in 22. So we're back to this hotter but shorter playbook we've been using really since 2020 at the lows of the pandemic.
It reminds me of what Charlie Babrinskoy told us last hour as well, because the areas that you favor are very much the ones that he does too, like consumer discretionary, financials. So I don't know if industrials are on this list, small caps, some healthcare, you say software over semis. Are there individual names, or why do you think, for instance, consumer discretionary would do well in an inflationary environment? Obviously because of the pricing power, but does the consumer writ large hold up okay next year?
Well, that's it. I mean, that's the sort of, the tricky part about this. As I said before, inflation is going to be good for a lot of these lagging areas of the economy. I mean, our view has been that we kind of went through a rolling recession the last 2 or 3 years. It bottomed in April, and now we're going to get, kind of an accelerating economy, both in terms of real growth and inflation. And that's quite good for earnings growth writ large. It's not just for, the large companies that can mitigate inflation. So it's good to a point, meaning the consumer can tolerate higher inflation as they're getting higher wages, which is, I think, part of the plan too, with the policy changes, right? Restricting immigration is arguably good for real wage growth at the lower end, the middle class. And of course, the high end may suffer from wage compression due to AI pressures, but that's a decent rebalancing. And so the idea here is that we've had a 3-year recession in consumer goods. very low volume growth, and that now is changing. Some of which is due to policy change, and some of which is just due to pent up demand.
So I think the way you summarize what Wilson is saying right here is in the following. By the way, we got a headline right here. NASDAQ says it will file paperwork on Monday with the U.S. SEC to extend trading to 23 hours on weekdays. Wow. I don't think that means the market's not going to close still at 4 p.m., but you're still going to be allowed to trade. Now, again, certain brokerages like give you the ability to trade past after hours. If the NASDAQ allows you to trade after hours, and that means I think there's just more liquidity that opens up after hours. It doesn't mean that the market doesn't close at 4 p.m. and that after hours doesn't close at 8 p.m., but it just means that after hours continues. And Robinhood, which, for example, uses Blue Ocean as their liquidity provider in the after hours, just has potentially institutional support from the NASDAQ. What does that mean on options? I'm not sure. I guess we'll have to see if we get more details on if that allows you to trade options. I don't think it will overnight, but it feels like inevitably that's what's going to play out. So this is what the bearish bullish kind of sentiment for next year, I think, is. If you're bearish, you think the consumer gets hit, the AI bubble pops, and the labor market gets hurt really bad, right? That's your sort of basic argument for how 2026 ends up not being productive. If you're bullish, the AI trade expands earnings. That continues to play out. Trump runs it hot, as Mike Wilson was saying. Lower rates, more investment, aka more GDP growth. And even if inflation goes up, if you have rates come down, you have a lot of money that starts to get allocated into risk on assets. And the consumer stays strong, which these retailer earnings, American Eagle, Lulu, Burlington, Best Buy, Five Below, gave us a glimpse that maybe the consumer will stay strong next year, even though there's, contrarian perspectives on that. But if that is the case, then that's how you can end up being bullish. So there's a lot of nuance to this like basic summary right here. But I think right now is the time where everyone kind of has to determine what part of the aisle they stand on. And I said this in the morning, I'm more bullish than not, simply because you don't fight the Fed when they're cutting rates, and you don't fight the AI earnings productivity that we're seeing. Now, if we stop seeing a meaningful easing cycle, or we stop seeing any meaningful earnings growth from AI, then yeah, you change your mind. But nothing in Q3 came even close to being able to lead to that conclusion. S&P is up a little bit after hours. Amazon's up a little bit. Google's up a little bit. And then Apple is up a little bit. ASTS, I think, was down based with Rocket Lab. Yeah. Look, again, these are very, very, very high beta names. So these are not surprising to see them fall. The SpaceX IPO got priced in, then it got priced out. Maybe it's still priced in. Who knows? But the only reason these names were up last week is because of SpaceX. And guess what? That news is old. So like easily the market can forget about it as much as they care about it, which again, I think in the long term is healthy for these names to consolidate here. But there's obviously people that probably bought those last week thinking SpaceX was an IPO this week. And like, that's just not the case. This honestly might be a year where the Russell 2000 outperforms the S&P. Hasn't happened since 2020. Yeah, it hasn't. IWM has always been lagging and of course, right, once you had COVID, those stocks got hit the worst. Year to date, IWM is up 14%. S&P, though, is still outperforming, up 16%. So there's a 2% delta between those two going into the end of the year. And realistically, these are the last 15 days. Everything that happens to determine how these stocks finish towards the end of 2025 is going to be determined in the next 2 weeks. And so that's why I think every day matters a little bit more. PayPal getting a little bit of move after hours, given it's instrumental towards the end of the week. Can we look at Hood? Yeah, again, Hood, sort of the same question we talked about this morning. I think the drop to 114.10 is pure algos at that. Like it already took a big beating last week. Did it need to take a further beating today to the level it took a beating at? No. So that's why we're seeing a bit of a recovery right here after hours, 115.59. But I mean, the story on Hood is really simple. Crypto got hit today. This is why the prediction markets are so important for their business, because if crypto volumes go down, they're going to need to replicate that with something else. And that's where I think the prediction markets become incredibly lucrative for them. Bitcoin right there trying to make its way up to 86. But Bitcoin took a $4,000 candle on the day. And so, I mean, that's obviously going to hurt a lot of the crypto derivative names. Why did SoFi get hit so hard today? I don't know. I really like it's quite hilarious. Down 5.3%. Really? It's $2 above where it was in the second week of November. I don't know. All the banks are doing great today. I guess SoFi's in that bucket of high beta more than it is in the bucket of financials. And that's why it's getting hit the way that it's getting hit. It got a downgrade today. Where does SoFi get a downgrade from? I mean, that is weird. Who the hell downgraded SoFi today? If it did. Rivian still was up on the day. BTC 85.86, 85,888, and then Hood 115. Me, I downgraded it. Oh my gosh. All right. Well, SoFi right here. That one continues to get hit. And then same thing with Hood. Also, all the fintechs in general. I mean, Affirm down 2% on the day. PayPal's only up because of that news after hours. Tesla. Dude, I don't really trust the Tesla pump yet because Tesla, I mean, it's volatile to the upside, but it's volatile to the downside. I would want to see a couple of days of it actually holding these levels. You could easily see this one just get hit right back down to 450 by the end of the week. If the street's like, oh yeah, Robotaxi in Austin, cool, we don't care anymore. I mean, like that is a very like basic thing that could happen on Tesla. Because again, Tesla's high beta. Like it's hard for me to be convinced that, yeah, market's selling off everything, but they're rotating into Tesla out of all things. Why? Because there's a video in Austin of someone not in a car. Like that you can't necessarily say that's cause for rotation. At some point, the earnings picture comes back into it. Now, maybe there's an argument for nothing else is growing and AI is getting long in the tooth, so we want to go long Tesla. But the other names, even a Broadcom, which trades at a multiple that's still way healthier than Tesla, is growing 100% year over year in their AI business. So I don't know if the market just continues to pull forward that premium yet. But I guess over the coming days, we'll see if that ends up happening. Yeah, the Neo Cloud's still getting hit after hours as well. Iren, wow, down another 1%. Nebius down 0.5%. Applied Digital down 0.22%. And then CoreWeave again down 0.14%. I feel like it is indication the market will rally soon. Tesla's leading the market, just like Tesla came down earlier in the year before all other stocks. Well, what happened last year is the opposite, though. Tesla rallied against the rest of the market at 488 in December, and then it tanked, and then so did the market. Like literally last year, Tesla was the only stock that was like hitting that new all-time high at 488, and then the rest of the market was like flat, and then Tesla tanked, and so the rest of the market. Now it recovered by like January, and then we had the March, April Liberation Day stuff. But if the playbook happens like it did last year, then this is an artificial pump that's going to go down with the rest of the market, and the rest of the market's going to go down too. How far does it go down? No one knows. But it is shaping up very similarly, because last time Tesla was up and the whole market was like not up. I don't know, maybe if we see that potentially happening again. Did you buy anything today? No, I did not buy anything today. I bought a little bit of the dip on Friday. Today did not buy anything. Last year was an election year. Yeah, that's fair. I mean, part of the reason Tesla ran from 250 to 480 in literally like 2 months was because of the election. But still, we're going to see if that plays out. Let's finish up with Dan Ives today and what he had to say about NVIDIA and Tesla.
SpaceX be, if you'll pardon the term, sexier than Tesla? In other words, right now, if you are a big fan of Elon Musk and everything he's doing in the future as described, this is the only public equity you can own for that story. Now, SpaceX could be the newer, younger thing on the block. What if investors go with that and thus remove some of the halo, right? The community effect around those who hold shares of Tesla and support its valuation just to have a piece of Musk?
Yeah, it's a great point. Look, I actually think it expands. I mean, to some extent, the ecosystem from SpaceX to Tesla and ultimately what's going to be the ownership of XAI. Because the reality is, when you think about what's happening here, I mean, we're talking about the next 5, 10, 15 years. Musk at the centerpiece of it. But I think it speaks to when it comes to Tesla, that continues to be the best play, because I think autonomous is worth $1 trillion alone. You think about Optimus in terms of true robotics. And as this all plays out, I think globally, I mean, they can own 70, 80% of the autonomous market, globally over the coming years.
I know you think that full self-driving penetration could be as high as 50%. In other words, half the people who buy a Tesla pay the extra money to have that option, which would be, as you say, a game changer for margins and for the stock. So that's part of what you're talking about, is for those who own Teslas, they use this technology. The other part is the Cybercab, what's it called?
Yep.
And how would you describe its position in this vis-a-vis Waymo, where Waymo also does quite well? The car's really expensive, regulatory and otherwise. What should we expect on the the Cybercab front from Tesla?
Well, first, like FSD, you're going to go from penetration 15% to 50%, and I think it could even be higher. So from a margin perspective, that's going to be huge. Look, Waymo is going to be a rounding error relative to what Tesla's going to do. I think not just in the US, but I think globally. Look, it speaks to just how expensive those cars are, how they could scale. And I think when you think about autonomous and in terms of the roadmap, I mean, we would expect probably some sort of executive order, going into early next year, where I think it's going to clear in terms of the federal roadmap. I mean, more and more, you're going to go away from the states to federal. And that's going to be extremely important for Tesla in terms of where I think they could take robotaxi.
I mean, I don't think that argument is crazy to say, and obviously that's why the market has started to give a little bit more of that premium. But again, Tesla's got to show that earnings growth actually is there versus just have the story, which is, what I think the market is going to be looking for going into 2026. Mid thoughts on Galaxy. I have not looked deeper into Galaxy. They did get a big upgrade last week from one of my favorite analysts. Of course, the stock down 9% on the day. Again, a lot of these names, they're in the same bucket. So there might be a particular difference within a few of them. I think Nebius is a bit more well-rounded and diversified, but they're in the same bucket. They're going to get hit at the same time, up or down. Some of them might get hit worse than the others, but they're all going to get hit. So yeah, I can take a deeper look at Galaxy, but that one down 8.2%. We did have Mike Novogratz on a couple weeks ago. And so the opportunity is massive for all the neoclouds. It's a question of if the market believes in the business model, if the market believes in their debt load that they're taking on, and if the market thinks the AI build out is going to play out, or if these GPUs are going to turn out to be like dark fiber from the year 2000, which I hopefully don't think would be the case. I'm making you take your eye off the road with the new FSD. Been thinking of getting a Tesla? Yes, you can, and it's not naggy as much as it was back in 13.9. Nonetheless, it's not fully unsupervised. But look, I'm always a big component of people getting a Tesla. I think it's just an amazing car. It's one of the best cars I've ever had. I also just think that if you buy it, you're buying it knowing that you're buying it for the experience, not necessarily just for FSD, because it's not, you can't sit in the back car and go to sleep yet. It's not at that level at the moment. Hopefully next year, but not at this moment. Definitely less nag. Yeah, a lot of people are agreeing with that. Like, it'll nag you, but it's not going to be like going crazy. That's because I think that Tesla just feels their AI is better to not necessarily be in a situation where it has to have the driver's attention constantly focusing. Doug says you can ride with your phone in your hand now. You just have to look up every few seconds to stay aware. Yeah, before you even touch your phone. Like, it'd be like weird, but it'd be freaky. It's like you'd go to just like pick up your phone from the charging dock and then be like, can you please pay attention? I'm like, how did you even know? It was freaky. It's like, how did you know? I just went to try to look at my phone. Boom. You get hit. Dude, the sunglasses thing doesn't work. I tried it. I really tried it. That shit did not work. I wish it would, but it didn't end up playing out for me. I mean, how much VG do you have? I bought 200 shares last week, guys. VG, I'm not an expert on. I realistically just bought it because Chris and Matt love it. And I'm like, all right, I'll hold on to it. This is not something where I don't even know what this position will look like over the next 5 years. So I am not the VG expert. I will now learn more about it as I'm owning it, but it's not something that I even look at or care about. Like, it's not that serious to me. And I think based on what Chris and Matt said, it's not something anyone should look at on a day-to-day basis. Unfortunately, everyone will. But this really is a 10-year play. So I don't think you can get too scared about this one. Are you looking at Skrelly's new company? Okay, so Skrelly's been really weird, dude. Skrelly got liquidated badly on a short that he took. What's the name of that biotech that went up like 500% or something? He was short that name. It's like Caps or something, whatever it was last 2 weeks ago. And again, I don't know what's CAPR. Yeah. I don't know what's wrong with him. I didn't talk about this last week because there were just too many headlines, but I saw this and I was just like, I don't know what the hell's going on. He's now pumping some new smaller name that's like not a quantum stock, but it's a different form of computing. And he's like a strategic advisor for them, QC Technologies. I am staying the hell away from this shit. He has become a strategic advisor to QC Technologies. Yeah, no, I'm not touching this. And he's doing this with James Altucher. Analog computing, correct. That's what it is. Analog, which I don't even know what the hell analog computing is. But analog computing apparently is his next big thing, as he says quantum computing is not going to work. I don't know what analog computing is, but honestly, if I had to bet, I feel like quantum maybe is a better shot at being a new computing platform than analog computing. But the fact that he's pumping this thing, what's the market cap? 18 million? Yeah. No, this is stupid. I think this is dumb. So maybe there is something very real about the technology around analog computing. I don't know enough about it, but yeah, December 3rd, this is when he made the post. We bought a new photonic optical computing stock. I'm convinced that the answer to frontier computing is optical, not quantum. We're calling it quantum class so investors understand it. 100 is my near-term target. I would join as CEO if I was allowed by Trump. So he's calling it quantum class so that he can get more investors to think that it's a quantum name, acknowledging that quantum is what gets people to care after hating quantum for basically the entire year. The irony is he didn't even get liquidated on a quantum short. He got liquidated on a biotech short, which is he's supposed to be good at. And so to recover from that, I guess he's going long this quantum shit or this analog shit. You got to protect yourself in the world of finance, bro. Greed will take you over. Greed will take you over. I don't know. Maybe there's something specific to this thesis on analog computing, but the only person that's going to buy it is retail. There's not anyone with big money that's actually going to buy this shit in any meaningful way. Yeah, he got liquidated on a challenge account. It's not his whole net worth. Yes, obviously the guy's not liquidated his entire net worth. The point is, though, a quantum short got him, or not a biotech short got him hit. So I think he's trying to make up for it with this shit. Like, dude, this stuff is just stupid to me. It's just stupid. Like, you don't talk about analog computing for a whole year and then randomly you're like, all right, I'm going to go long analog computing now. This is the new thing. And then you become a strategic advisor and you start pumping the ticker. Like, I don't know. I'm not a fan of that stuff, dude. It's just icky. It's really fucking icky. And then you start to look at a person's history and you're like, all right, dude, like I can respect you in terms of your expertise in certain stuff, but I'm also just like, this is bullshit. And sometimes it's okay to just call that out. I mean, if an $18 million company has to name you a strategic advisor, yeah, you're trying to pump the stock. I mean, let's just be clear about it. Like, you're trying to pump the stock. Like, there's no ifs, ands, or but about it. There's no earnings growth that's helping that. This thing was $148 on Tuesday, January 14th. It is now $4.43. It was $3 the day he mentioned it, pumped up to $7. Now it's back down to $4. Like, I don't know what we're talking about. All right, so that's what we got in the context of that short. SoFi continues to fall after hours. 25.70. This one's still getting hit. And then Robinhood 115.25 as that one is somewhat okay after hours. I really don't know why SoFi continues to fall, but there's something around their narrative as a financial that the market's not liking. Tesla also getting hit after hours. Tesla's not holding the green that it had during the day. Same thing with Galaxy, Nebius, Iren, Applied Digital, all of these stocks continuing to get some pain. Upstart fell during the day as well. Upstart, yep, down 7%. Wow. All the lenders. All of the lenders getting hit. Trump, all right, so we're getting some quotes from that Trump meeting that we had today. Trump is classifying fentanyl as a weapon of mass destruction in a push to ratchet up pressure on Latin America over drug trafficking. And Trump is now unveiling a new AI tech force in an apparent attempt to pick up the pieces after Musk's Doge swept through the federal government and wiped out existing tech expertise. Huh. Okay, let's see if we can get a little bit of coverage on that in particular. New tech force is what Trump is announcing. Before we get into that, let's take a look at this clip right here, which is coverage on the state of IPOs, including SpaceX, and then we'll get some of that Trump coverage. Yeah, Kathy sold some SoFi. I mean, I don't know if that's really affecting SoFi. I don't know if the market cares that much about Kathy buying or selling, but Kathy did indeed sell some SoFi.
Most valuable private companies, and everyone's been waiting for, whether it's Stripe, now OpenAI, Anthropic, Databricks coming up. I mean, so that one may be a little bit of an indicator. But yeah, this is massive.
Does it open the floodgates to some others, or is it still highly selective?
I think it will continue to be highly selective, but it will at least open the floodgate up so you can be selective. How about that? So when we think about the business model, it's not exactly an AI, although with Elon talking about building out data centers in space, who knows, maybe there's an AI play in there.
I feel like everything kind of is, especially as it revolves around him, AI, robotics, and whatever else. You guys were in Anthropic. You're in Anthropic
Correct.
early, right?
Yes, Series D.
I mean, how are you guys thinking about that? You as an investor, as a venture capitalist?
Yeah, we love the business model and the fact that Dario had two insights early on while he was at OpenAI. He had the insight around making models more efficient so that they would require less compute and then less data, and then also constitutional AI, which placed some guardrails around AI. That had two big implications. First, we now know that Anthropic is projected to reach cash flow break even first. And that's what we saw that was really enticing to us, was the fact that Dario was interested in making the model efficient, not going after video. And then with constitutional AI, really setting the stage to be really credible with the enterprise market, which now we're seeing Anthropic is doing extremely well and driving great revenue as a result.
Anthropic is another one that's scheduled to go public next year. Now, they haven't confirmed it as deeply as SpaceX, but if they did, obviously that's going to be a big deal for the IPO markets. Here's these clips of Trump on fentanyl and weed, where he talked about earlier today.
Formally classifying fentanyl as a weapon of mass destruction, which is what it is. No bomb does what this is doing. 200 to 300,000 people die every year that we know of. So we're formally classifying fentanyl as a weapon of mass destruction. But before I sign the fentanyl order, we will pin these great service members with their medals. And here today are the first 13 warriors who will receive the Mexican.
Okay, and then this was the marijuana question.
Sir, on the issue of drugs, is it accurate that you are considering an executive order to reclassify marijuana under the control?
We are considering that, yeah.
Are you planning?
Because a lot of people want to see it, the reclassification, because it leads to tremendous amounts of research that can't be done unless you reclassify. So we are looking at that very strongly.
Mr. President,
Katie?
is it true that the reports that you reviewed with the Israeli Prime Minister are the reports that you?
Okay, so fentanyl, weapon of mass destruction, very interesting terminology that Trump is using there, given the history with WMDs in this country. And then you've got weed stocks that likely have already caught a bid, but the argument here is that they will be reclassified. So that ended up being a buy the rumor, sell the news, which ended up becoming a real piece of news. But that was as of last week. Disney OpenAI deal to license Disney characters is entirely in stock. Wow. That's a headline. BBG just now, 5 minutes ago. Okay, this goes back to what we talked about last night. OpenAI is going to be paying $6 billion for stock-based compensation, which is about a third of the revenues. Now, Disney is licensing their characters, and what they're getting is OpenAI stock, not cash. It's a weird deal for Disney, dude. Like, the only upside I see is Disney potentially getting Mickey Mouse to be relevant with 15-year-olds because of AI prompts. The downside is the AI prompts end up becoming horrendous with zero guardrails. And if you do guardrails, then you're not going to get the distribution because people are not going to be able to prompt what they want. In fact, they're going to be more angry that they can't prompt these characters to do what they want to do. And then B, all you're getting is OpenAI stock, which, like, yeah, hopefully it's more valuable than what it is today. But it's not pure cash. It is not. So that's not going to be accretive to shareholders in the short term if it's purely just stock. Yeah, this one, I was not a fan of this deal either, dude. I was not a fan of this deal when it came out, but I guess that's what's happening. Here's the highlights of the PayPal thing as well. Let's look at this. So PayPal is going to be filing to create a bank. They aim to serve U.S. small businesses with direct lending. 420,000 businesses accounts were funded in 2013. Provided $30 billion in working capital. Will offer interest-bearing savings. Seeks FDIC insurance. Targets direct card network. Mark McNeil is going to be the president. And the move reduces reliance on third-party lenders and improves efficiency. I mean, I don't hate this. It makes sense for PayPal to go after this. I just don't know if this is what's going to fix a lot of the problems with the stock right now. But there it is, PayPal Bank. That's what you're seeing. And then on the NASDAQ news, these are the updates right here. NASDAQ to file SEC plan for 23-hour, 5-day stock, so not Saturday and Sunday. The trading will go from 9 p.m. Sunday to Friday, 8 p.m. So realistically, Saturday is off, and then Friday after 8 p.m. is off. Overnight session of 9 p.m. to 4 a.m., 16 to 23 hours a day. There's going to be a 1-hour break. And SEC filing follows similar 24 plans by the New York Stock Exchange and the CBOE. Bro, we are going to have eventually 24/7 trading, and it's going to be crazy. My opinion is kind of counterintuitive on this. As much as I love the markets, I like that the markets close. Like, I think it's important to have an open and a close. Otherwise, it's hard to get through the day, especially on a red day. You need that thing to just close. Like, let's just stop. Let's just wait till everyone gets their heads together before we come back. I do like the overnight markets. I just don't know if the overnight markets necessarily need to become 24/7. So maybe 24/7 is not the best idea. You just like the bell. Yeah, how do I ring my bell if there's no open and close? Like, what are we doing at that point? It's delegitimizing my bell if we don't have an open or a close. Here's the Ford CEO on this $19 billion charge-off that they're taking.
Walk us back to a couple of months ago, or how long ago was it that you and your team said, it's not working what we planned? We have to come up with a new strategy. And what was the thought process as you made the decision, we've got to shift?
Phil, well, thanks for having me on the show. Look, it's the last couple of months have been really clear to us. The EV market shrank to about 5% of the U.S. market, but more importantly, the very high-end EVs, the $50,000, $70,000, $80,000 vehicles, they just weren't selling. And we had planned a full EV lineup, but we also have hybrids, and we learned a lot about the market. And we think it was the right time to listen to the customers. We evaluated the market, and we made the call. We're following customers to where the market is, not where people thought it was going to be, but where it is today, Phil. And that's really the genesis of our announcement. Be better for the company's profitability, better for shareholders, and a lot of new American jobs.
Yeah, but $19.5 billion, That's a big enchilada out there. And I know they're pre-tax charges, but a lot of people will look at this and say, is that the cost of saying we tried it, the other strategy wasn't working, and so we've got to pivot?
Well, yeah, we really do. The non-cash is the biggest part of it. The cash charges are about $5.5 billion, and the return on that $5.5 billion looks fantastic. These are affordable trucks and vans. They're in the heart of what Ford knows how to do. They'll be hybrid and e-revs, very profitable vehicles. We know these customers really well. We're not guessing. And we have a great EV platform in the UEV that's affordable at $30,000. We think we have the best portfolio of any auto company in the US. And we now get to focus as a team on bringing all those products to market. And it gives our Model E business, effectively our EV business, a road to profitability, which did not exist a month ago.
All right. That's Ford bowing out of the EV race. It doesn't look like that's necessarily going to be slowing down. Again, it did feel like this was inevitable, but now it's actually happening. It's probably the right decision for Ford. This is a chart that I also thought was pretty interesting right here. This is Tesla's EV market share in the US, which has jumped as other automakers' sales fell even more. So although, yes, it's not the 2019 level of excitement for EVs or the type of market share that Tesla had back then, Tesla still is, I'm biased here, but it's the single best EV in the world. Like, it's a phenomenal experience. And it was going to be hard for Ford or GM to compete in the first place with the type of engineering brilliance that you have at Tesla. What's Ford's market cap? Yeah, 50 billion. I don't think Tesla would buy Ford. I know a lot of people have talked about that for a while. The problem with Tesla buying Ford is that it's too political, because Ford employs a lot of people, especially in the Midwest. And there's you got the unions, you have a certain culture there. Tesla doesn't really have to deal with all that stuff. Their stock actually appreciates. That's why employees are happy to be compensated in stock. So I really doubt they'd ever try to buy Ford, unless the thing just gets dirt cheap. But Ford employees don't really care about the stock because they don't get paid in stock. They get paid in benefits. And that's what they care more about. Ford right there up 1.25%. After hours. Are you buying Broadcom? No. Is anyone in the chat buying Broadcom? Dude, I just still can't get past the multiple. Broadcom, new lows, 338 after hours. The multiple is still not attractive on this name. I can't believe at 400, this thing was seen as cheap. It's a very important company, and it's probably a buy based on just the volatility of the velocity of the downside move of okay, how much lower can it go? Obviously, stocks can go to zero, but the point is, at some point, there becomes a floor. I don't know if we've hit it yet. It still is obviously a falling knife, down another 5.6% today. But the multiple is not attractive, not in any world. Dude, just because I say a stock doesn't have an attractive multiple, and then you guys bring up Palantir, I don't know what you're trying to get out of this. Yes, Palantir's multiple is also expensive. I don't know how many times I have to say that. Guess what? I bought that thing at $6, so it's okay. If you bought Broadcom at $10, you don't care if it goes down a little bit today or a lot. Just like I wouldn't care if Palantir goes back down to 130. I honestly don't care. It would suck, but I wouldn't care. That does not mean just because Palantir has an aggressive multiple, other stocks don't. Also, Palantir has a different narrative than Broadcom. Broadcom is a hardware company. Palantir is a software company. In and of itself, you have two different narratives that are going against each other. Palantir is the enterprise software AI play that's growing 60%. Broadcom is the custom leading hardware company when it comes to ASICs. Important narratives, but different narratives. Doesn't mean that just because Palantir has a high multiple, Broadcom also can't be critiqued for having a high multiple. There's a difference here. And regardless, again, time and time again, I've said Palantir's multiple is aggressive if Palantir doesn't keep up the growth. Or, by the way, Palantir doesn't have a perfect quarter every quarter for the next basically 3 years. This stock's getting destroyed. And we all know this. It trades at 112 times sales. Guess what? They keep having perfect quarters. Like the stock's basically at where it was right before earnings. I know it pumped to 200 right before earnings, but the fact that it's even holding 180 to me is incredible, especially given the past 2 weeks. You would think Palantir's be back at the 150s. Nope. Market wants to give it a premium. Broadcom did not have a perfect quarter. There were two things in particular that were wrong for Broadcom. One was the OpenAI headline. The second was their non-AI revenues that stayed flat year over year. So, yeah, I think there's a difference here. But obviously it doesn't matter because that's the easiest way to rage bait me. It's like, hey, well, what about Palantir? It's like, well, what about it? What about it? Can't ever call anything expensive because of Palantir. I was saying that this morning. I was like, SpaceX is expensive. You're like, well, what about Palantir? It's like, okay, Palantir's expensive too. But Palantir's also been public for 5 years. SpaceX is going to go up. And then I don't know if it's going to be able to keep going up. Like, you're starting at 800 billion on SpaceX. And if there's no data center and space revenue anytime soon, which, I mean, I don't know if that's going to happen anytime soon, then what are you buying SpaceX for? Starlink? Okay, cool. Starlink's growing. Like, you're paying that type of a multiple for Starlink? No, you're paying for Elon's brand at that point, which is fine. But Elon's brand has also resulted in Tesla going up and down by 40, 50% easily within the same year. So it's not invincible is my point. Which is why I think Elon's pumping this space data center argument as hard as he can, because you need another narrative to get people excited. Believe it or not, Palantir calls. Oh my gosh. Is anyone in leaps for next year? The only leaps I ever grab. But is anyone in like legit leaps for next year? Or like you have a heavy position in this. I mean, you know, to the Tesla Bulls credit, a lot of people were buying leaps at around 300. For I think 450 was the strike for 2027. That got a lot of attention. We had like $10 million of 500 leaps that were bought for January 30th, which is very short term. Meta, yeah, that's another one. Chris is heavy in Meta. Not in hood leaps. I think that's risky. Get any market downturn, those hood leaps are not going to print. SoFi leaps, I think, should be relatively reasonable here, but we got to figure out why the hell Noto's diluting so much. Look, if Hood doesn't do well, I don't know if Weeble's going to do well. So the Weeble leaps, I think, are a bit suspect. Nebius should do well if the data center thesis doesn't get crushed next year. Which, look, fundamentally, I don't think it's going to get crushed. Narrative-wise, it continues to get crushed. I mean, take a look at this picture right here, which I also thought was very interesting. So the tech sector this year is up 28%, but its valuation is lower than where it started earlier in the year. The tech sector, S&P 500 technology, the NTM PE ratio, so far is lower on a forward PE basis than it began in January. That is crazy. That means earnings growth has outpaced the actual index itself of the S&P 500 technology sector. How does anyone in the world see this chart and say bubble? There's no way, dude. There's just no way. You can maybe say the market's never traded at 26 times on the S&P 500, so like that premium needs to be consolidated. Therefore, you can't easily, just keep expanding the premium. Sure, that's fine. But bubble? The PE is lower than where it was in January, and earnings have grown, even though it's up 30%, which means obviously earnings have growth has outpaced the move on the index. Don't know if that's bearish. This argument I also thought was pretty interesting. Take a look at this stat. Friday saw the S&P 500 put volume at 2.932 million. There's only been 7 times in history where people bought basically 3 million put contracts on the S&P 500. August 5th, 2024, April 4th, 2025, April 7th, 2025, October 10th, November 10th, November 19th, November 20th, and December 12th. All of those in 2025. 3 to 5 days later, all of us lived through those 7 times, one of those being in 2024. The market was up on average 3.5%. So every time you had 3 million puts, or at 2.297 million puts being bought, this is going back to 1995 on the S&P 500, 3 days later, basically call it a week later, you were up 3%. And 3 weeks later, 7 out of 7 times, which would put us to basically first week of January, we were up 6%, which would that puts us at 7,000 on the S&P. So I thought that stat was interesting today. But it goes back to this argument of just like, all right, bubble, it's hard to make the argument that that's a bubble. Now, historically, it doesn't have to follow that same trend, but that doesn't need to give the fodder for like, yes, it's definitely a bubble. Can you link this chart? Yeah, I'll put it in the chat right here. I thought it was interesting. I mean, I don't know, 3 million puts were bought on Friday. Like, people got bearish on Friday. People bought protection. But when it's that level of protection, that's when, things kind of pivot. All right, what else we got? What else we have? I think those are most of the headlines. Steve said he's going to be taking off a couple days this week, so he'll be on the show. Today he's still at work, but probably market open on like Wednesday or Thursday he'll be on. But yeah, today he is at work. The PayPal bank we talked about. Yeah, I talked to Steve earlier in the day. He sent me this picture again, which, look, I can't blame him for getting it again. Cannot blame him. It's legit. Best meatballs in New York. It's legit. Nike earnings in 2 days. I think the Nike insider buy was bullish. I don't know if that's enough for Nike to be a buy. I mean, the real catalyst for Nike or ELF is going to be the Supreme Court tariff thing, which I think we get news by the end of the year. But if it's early January, you're going to have to wait. ELF right there was up 3% of the day. So I don't know if a good earnings is going to be enough for Nike. Also, how good of an earnings can they have? Like, they will probably have some good numbers because of the retailer trade going well. And Nike at the end of the day is a retailer. But is it enough to get this thing back up into the 80s where it was earlier? I don't know. Yeah, Nike's still down 8% year to date. It was last time it was 80 was February 2026 or 26th. So this thing has still been a disaster all year, down about 8%. What do you think of BM&R leaps? The problem with BM&R, and we've been talking about this for the past couple of weeks right now, is that what is being seen on BM&R is essentially not a thesis-defining argument on Ethereum, but rather a global liquidity play on crypto. And it means even if ETH has tons and tons of positive headlines, which this morning JP Morgan announced launching tokenized assets and money market funds on Ethereum, super bullish for ETH, doesn't mean ETH itself is going to go up. Doesn't mean Bitcoin itself is going to go up. And I don't know if we are in a crypto winter yet. Like, the jury's out on that. If we are, Bitmine leaps, MicroStrategy leaps, HUD leaps, Coinbase leaps, they're all getting crushed next year. If we're not, maybe the leaps don't get crushed, but maybe they're also not giving you asymmetric upside because maybe you don't see BM&R get back to 60 or HUD get back to 150 anytime soon. But if it stabilizes, then a lot of those names will be able to, not get destroyed, which is good. But they're all contingent on liquidity around the Fed, quantitative easing, and then if that translates into crypto. And the irony is we got the Fed to give us cuts. We got the Fed to be super dovish, but we are not getting the Fed, or we're not getting the sort of rotation into crypto based on that narrative. Which, again, to me, it feels more bearish than not on crypto, just being honest. Like, the Fed cuts, you have global liquidity rising, you have quantitative easing starting, and still crypto can't catch a bid. It's like, what's going on? There's something deeper for why these assets aren't rising. Now, that's not bearish crypto as an argument. That's just short-term. This thing doesn't look like it wants to necessarily have some fun, even though all the conditions for it to have fun are in place. Now, maybe the Japanese stuff and the bond yields and the rate hikes are what's hurting crypto, as it's the first asset that gets sold off in the midst of all this drying up liquidity globally, or at least in Japan. But it's weird. It's weird that it's not actually making a move here. Also, isn't this the 8th week? Tom Lee said that, yeah, this is the 8th week from October 10th. So he said this week is when I think he cited some historical stat that it takes 8 weeks for the leverage to get flushed out, and this is like the 8th week. I mean, I don't know if that stat's like going to result in anything meaningful, but this would be the week where you start to see a reversal if we do see a reversal. These are the stocks that are Goldman's top catch-up stocks in 2026. So let me see if anyone is familiar with these names. I saw a couple that I like, but Goldman says these are the names that we are bullish on as a catch-up play into 2026. You have Norfolk, you have CPKC, Canadian Pacific. They're not really tech names necessarily. You have Honeywell, Lennox. They're not meant to necessarily be the sexiest names, but these are the ones that Goldman is saying. I preferred mustard stocks. That was a good one. I should have made that joke. That was a good one. $2 trillion in Japan bank loans are leveraged and tilt to the U.S. markets. This hike is going to cause a sell-off. We just don't know how big it will be. See, the problem is everyone knows there's a hike. That's my concern with the Japanese hike argument. Everyone knows it's happening. Like it's priced in, just like a rate cut was priced in the U.S. So the idea that why wouldn't they already start to sell off and rotate if we knew a hike was happening? And maybe they already did, which is why the pain is not going to be as bad on Friday when they hike. But it's not like there's some mystery on what's going to happen on Friday. Like, no, we know there's a hike. And I don't think that's potentially going to create that much pain. But if it does, that's your basic explanation for it. I don't know if that's going to be the biggest concern. What are your thoughts on SoFi Q1 2026? I think SoFi should be fine. The company, the stock, who knows? But nothing I'm seeing from the business on SoFi or their fundamentals are signaling anything weird going into 2026. I'm just curious, why the hell did they raise that 1.5 billion? So we don't have the answer to that yet. But I mean, what's the bear case for SoFi next year? Like recession? Okay, that's every stock at that point. Lending should only be going up. Rates coming down is good for refinancing. Company still growing at 35%. EPS should hit almost close to $1. I guess dilution is the bear case, but if that dilution is accretive, then I don't think there should be that much pain. I knew SoFi will dump when Tanner started pumping it. You realize Tanner started talking about SoFi at $4, right? I think SoFi's done pretty well from $4. So I don't think Tanner talking about SoFi necessarily is causing SoFi to dump, given he was talking about it years ago. More fintechs are getting a bank charter, and that's creating competition. I don't know. Is that really enough to take off SoFi here? Do you think SoFi can double in 2026? Well, it basically has to for Noto to get paid that huge compensation package. So I've been asking this question for the past year now. Do people think SoFi can pull a Hood or Palantir? Like, it's been a question that I've asked many times. And even the biggest of bulls I ask end up saying, no, it's probably going to be tough. Because again, Hood and Palantir get a premium valuation, as everyone loves to remind me of every day. And is SoFi exciting enough to get that premium valuation? By the way, the other way I would define premium valuation outside of like all the narratives around Hood and Palantir is operating leverage. Like, both companies just have absurd operating leverage. Palantir at 50%, Hood at 40%. SoFi's not there yet. I think SoFi's at like 17%. So if SoFi could get that operating leverage up anywhere near Hood's level, even if they could double it from here, I mean, yeah, the stock doesn't have to double, but the stock could definitely do way better. But I think that's what they're going to have to do going into next year. Steve's doppelganger is on CNBC. Let's listen to him. He thinks that this guy is not his doppelganger, but I am confident this is his doppelganger. So let's hear what Chris from Morgan Stanley has to say.
Proving you're in a situation where You actually have fiscal policy starting to kick in with Big Beautiful Bill. And then the monetary policy has also been very accretive. You throw in some deregulation, additional M&A, animal spirits start coming in. It looks pretty promising.
Wow. All right. So that's a run it hot rally. Is that an everything rally?
You know, look, I think you're going to have winners and losers here, and I think you're bound to see a fair amount of volatility increase. I don't think that this is a situation where there aren't risks, but I do think this is a situation.
Tell me that's not Steve, bro. And he's bullish, just like Steve. If Steve put on a suit and slicked his hair back, this is Steve. This is literally Steve.
Situation where you could see some leadership changes, you could see this rally kind of broadening out. And while tech will certainly do well, I don't know necessarily that it's going to lead the way that it has the last 3 years.
So what has been happening more recently, you think is a template for what next year could look like?
Potentially. Look, I think you're in a situation right now where, you know, there's a reason why markets have been concentrated. The lion's share of the earnings growth has come from those types of companies. We're starting to see a situation where, in addition to some of these tailwinds affecting these other companies that have been kind of overlooked, that you should start to see them starting to do well on pretty low expectations.
I don't know about expectations being so low. I mean, the Russell, for example, is up 6% in a month. It's had a good year. It's up almost 14%.
Yep.
You look at a lot of other sectors within this market, industrial's up 18, financials up almost 14. There actually is a lot of broadening that's happened in this market.
It's happening, but I think expectations for next year are relatively lower versus the Mag 7. So I think in our minds, that's going to continue to play itself out. You're in a situation where earnings will be a lot easier to overcome in some of these sectors, and you've got that secular tailwind that should be beneficial too.
Dude, we need to get Steve on this show. Could you imagine if Steve was next to Scott on the closing bell and they do a segment together? I mean, like, it would be the best. And given how well I know Steve, he would not even for a second be nervous. There would not be one iota of nervousness. He would be so ready for that moment. And he would basically just say what he said in his tweet over the weekend. It was a great tweet about the AI bears. I'll link it right here in the chat for those that haven't read it. But he would just straight up go nuclear on all these AI bears and make his argument. Look at this. Dear AI bears, thank you for the false narrative and the cheaper prices. Steve doesn't care, bro. I really don't. I would be nervous if I was there. I'm not going to lie. I would be like, oh boy, we're on TV, yada, yada. But like, I don't think Steve would be even nervous for a second. You know, I'd be nervous because I'd start talking fast. Apparently, you guys have told me I talk really fast when I'm nervous. Now, I know I talk fast throughout the entire day, but like the Bloomberg interview I did back in May, it was like the first question was a little bit too fast, and then I calmed down. I think it was good content, but it was too fast. So I'd probably be way too fast. But Steve would completely not care. When you eat Polish meatballs, you can do anything. Yes, that's correct. Hulk Steve would come out. You move in your chair like carp. Okay, sometimes I do that. That's fair. What do you think about The Philosopher in the Valley? I read the whole book. I loved it. I interviewed the author of the book. It's on the channel. I don't read books, to be honest. Like I don't have the patience to read books, but that book I legit read, and I really enjoyed the book. Obviously, I was interested in it because it had to do with carp, but I thought the interview was really cool as well. What else? Is that pretty much it for today? It's just kind of an annoying day, right? Because everyone felt, all right, Friday we sold off. Maybe we'll just get back to normal. And then today, again, S&P's flat. We didn't really change, but a lot of these other stocks continue to get hit. I just wonder now, do we get that end of year run? Do we really, really, really get that end of year run that we're all looking for? And I think that's like the biggest question that everyone's asking right now. By the way, take a look at this news. A16Z VC fund in Silicon Valley By the way, I signed my legal docs for becoming a scout for them, so I will have an update on that probably by the end of the year. But yeah, we'll get a lot more details on that. I had to sign a bunch of docs last week, and so all those are signed, and so should be getting those details out. They just invested $41 million in Morello, a foundation model company focused on the sound layer for video. AI company helping video sound that needs to be produced. 40 million seed round. Crazy. Like these AI companies continue, and look, either these AI companies are super overvalued or they are growing crazily, Cursor being the sort of like main argument around fast AI growth. And that's why you're seeing more and more excitement from the VCs to invest in them. If we don't get a rally, your beard's got to go. Oh my gosh, my beard, my scarf. No one wants to blame Sam Altman and that stupid freaking answer he gave to Brad. You know, I watched the thing popped up on my feed again of him answering that freaking that answer, bro. What, like, could the podcast producers have not just like cut that part out? All they have to do is be like, yeah, you know, this one looks bad. We don't really need to keep this. I mean, you know, there's hundreds of trillions of dollars relying on this one guy. We could, you know, he doesn't look the best right here. We'll cut this part out. It came up on my feed again today. And I was just like, oh my gosh, this was so bad. So freaking bad. And then you got Nadella doing this fake ass laugh, trying to hide how embarrassed he is that the guy he gave $20 billion to just said, oh, you can sell your shares, no problem. I'm going to pull up that clip again. Like, it was so bad once you hear it again. Like, it's a month. It happened in October, right? Hearing it a month later, you realize how much the market just realized, oh, this guy doesn't have the money. This guy doesn't have the money. He's getting defensive because he doesn't have the money. And unfortunately, that's what I think started a lot of the AI trade pain.
Biggest question I've heard all week and hanging over the market is how can the company with 13 billion in revenues make 1.4 trillion of spend commitments? You know, and you've heard the criticism,
First
Sam.
of all, we're doing well more revenue than that. Second of all, Brad, if you want to sell your shares, I'll find you a buyer. I just.
How does someone tell one of their biggest investors, screw you, you can sell your shares if you don't believe in us? It's not like Brad is screwing the guy over. It's not like Brad has been like not supporting. He's been publicly embracing OpenAI for 5 years at this point. You tell that guy to screw off? And then Nadella with this awkward laugh trying to act like it's not a big deal that Sam Altman just said that. No, bro, that started the pain of the past 2 months. When did this come out? October 31st. That is when we started to realize this AI trade might be a little bit in jeopardy because of OpenAI.
Well, Brad, if you want to sell your shares, I'll find you a buyer. I just, enough. Like, you know, people are, I think there's a lot of people who would love to buy OpenAI shares. I don't think you would,
including myself, including myself,
people who talk with a lot of like breathless concern about our compute stuff or whatever, that would be thrilled to buy shares. So I think we could sell, you know, your shares or anybody else's to some of the people who are making the most noise on Twitter, whatever, about this very quickly. We do plan for
not making noise. 1.4 trillion of the only reason AMD stock pumped, Oracle pumped, is because you said you're going to pay a lot of money. It's not noise. It's a very fair and reasonable question. And like, there was such an easy way to answer that. And he fumbled it and just sounded like a dick.
Revenue to grow steeply. Revenue is growing steeply. We are taking a forward bet that it's going to continue to grow, and that not only will ChatGPT keep growing, but we will be able to become one of the important AI clouds, that our consumer device business will be a significant and important thing, that AI that can automate science will create huge value. So, you know, there are not many times that I want to be a public company, but one of the rare times it's appealing is when those people are writing these ridiculous OpenAI is about to go out of business and, you know, whatever. I would love to tell them they could just short the stock, and I would love to see them get burned on that.
That was worse. That was worse at the end, because you can only talk a lot of shit to the shorts when your stock is going up. And you're right. Remember, Karp started talking shit publicly to the shorts. I remember the exact day it happened in that interview with Sarah Eisman when he talked about the Coke dealers and all this stuff. Stock was $24. Today, the stock is $180. Okay, you're allowed to talk shit at that point. When your stock goes from 20 to 180, Elon was talking a lot of shit in, 2019 to the shorts. That's when Tesla did a 20x in a year. Bankrupted Jim Chanos, right? Like that you're allowed to talk that shit. I don't know if Sam Altman thinks that he can go public and OpenAI would just be seen as this like beautiful child of AI and that the shorts wouldn't take it, because the shorts will manipulate any stock in the market, much less a stock that probably is not growing fast enough to justify the valuation, especially if there's not a narrative on it, aka it's commoditized in terms of the LLM space, especially when they have to issue a code red when Gemini 3 comes out. And like, I don't know if he'll be able to tell the shorts to go kick rocks because he hasn't shown any action. I mean, the company's not even profitable. He's talking about, I want to tell people to short the stock. Like if he went public tomorrow, they probably would take years before they become profitable, which is why they're not going to go public tomorrow. And I think the shorts would have a lot of fun with it. How do we even get into this rant? Oh yeah, because everyone's blaming my beard. Yeah, we're blaming my beard and not that guy. That's your enemy, not my facial hair or my scarf. It's him and his stupid answers. I say this, but I still want Sam Altman on the show one day. So, dude, but if he came on the show, I feel like I would bring this situation up. I'd be like, hey, do you think you kind of mishandled the Brad Gerstner question? I would have to ask it in a really nice way so he doesn't leave. But I would absolutely want to ask him that question. Oh, Red Days blame him it. Yeah. I'll take the shots. I'll take the shots for it. What do you think his favorite movie is? That's a good question. What if it's some crazy, freaky shit, bro? Like, it's like some Black Mirror type of movie, which would make sense that it is. By the way, in honor of Tesla getting to a 52-week high today, we gotta rewatch this clip again.
Saying on my phone, I don't know, some of you know this on the iPhone, they've got that little stock app. I added Tesla to it to give me a little boost during the day. 225 and dropping. So, and if you own one, we're not blaming you. You can take dental floss and pull the Tesla thing off, you know, and take out, just telling you. Saying
that literally that day, that was your bottom. That freaking day. That was your bottom. So we need, next time Tim Waltz publicly calls out a stock like that, we gotta hold on to it. What else? What else do we got going on? Talked about the iRobot news earlier this week. We talked about BM&R. Talked about the JP Morgan stuff. Paraj, thanks for the super chat. Have you watched the Tucker interview with Sam? Yes. That one doesn't, I mean, dude, we don't even talk enough about the whistleblower that ended up getting killed in OpenAI. I mean, Tucker tried to, get a little bit closer to the truth on that. And again, Sam became incredibly defensive. So yeah, that was also crazy. And that happened a couple of weeks ago as well. Yeah, so daily recap will be out today. I already recorded it. Sorry we couldn't get through it last week. Dude, these last couple of weeks going into the end of the year, there's something that always comes up. And, we have birthdays and holidays and this and that. And then my building lost power on Wednesday. Like, there's always some shit that, like, stops it towards the end of the year. But yes, daily recap will be back this week. And it'll be out in a few hours. What's the next 1000x banger from Eric Jackson? Well, he said next door last week. So maybe that's it. That stock was down 10% today. There you go. Why did Ilya leave OpenAI? There's a lot of reasons. I think the number one reason is that I mean, again, Ilya said in multiple podcasts over the past couple of months that he thinks LLMs are reaching a ceiling and that there's not that much more innovation to do with making them better, which I think the foundation model companies fundamentally disagree with, which is why they're spending all this money on training and they want to get to AGI. But I think Ilya thinks of it in a different way. Now, granted, Ilya has a company that's worth $32 billion and there's no product. So I don't know what the hell Ilya is doing either. But he did leave OpenAI. He also probably thought OpenAI wasn't safe. I mean, his company is called Super Safe Intelligence. So he probably thought that OpenAI wasn't safe, which I guess could be, the other argument that's there. This is a Santa rally, lots of red for all of us naughty boys and girls. Yeah, dude, maybe we were just naughty this whole year. That's why we're getting the red. It's a Santa rally, but we're naughty. So that's why we're getting the red. That might be the argument. We talked about the PayPal news. I mean, I don't know how big of a deal it's going to be. Obviously seems a little bit, I don't think it's bearish SoFi, but SoFi is acting like it's bearish because you have a new lending competitor entering the race. But look at that, SoFi down another 0.3% after hours on that news. But should be relatively bullish. Relatively bullish PayPal. PayPal right there, 61.40 after hours. What's your thoughts on data tomorrow? Well, actually, let's bring up some data to get some thoughts on that. So jobs report tomorrow. It's going to be out at 8:30, right? Yes. Right? No. When the hell does it come out? Are they putting it out at 1 p.m.? This isn't the usual type of release, so it wouldn't surprise me if they put it out in a no. Tomorrow's Tuesday, right? Tuesday. Yes. Okay. 119,000. Street wants 119,000. Oh, we get retail sales too. Street wants 0.2% on retail sales. Okay. So, oh no. November is actually 40,000 expectation. Sorry, 40,000. I was looking at October. So the street wants 40,000 jobs. The forecast is 25,000. Consensus is 40. If we come in below 40, that would be a miss. I think I should go live earlier tomorrow. It's going to be a big jobs report. Then again, even if we come in at like 37,000, is the street going to care that much? Now, if we come in at like 20,000 or like 15,000, yeah, maybe that's not the best. But I don't know if the street's going to be that bad or if it's going to be that bad about it. Is Palantir the only company that knows what to do with LLMs? I think there's a lot of companies that are trying to operationalize LLMs. Palantir is the only one that's showing the growth from it. Like, I'm not even being emotional here. It's like Palantir is the only one growing 60%, not off a small base either. So, like, yeah, I mean, sure, every company is trying to use LLMs to be productive and make them make sense. But if you just watch Palantir's Paragon event they had last week as well, the one that I interviewed the NVIDIA people from, I mean, again, those presentations are showing real progress of Palantir's version of AI and operationalizing LLMs in an enterprise. Long as revenue growth doesn't slow down, Palantir is going to hold its multiple. If it slows down, we get hit. If it doesn't, we'll be okay. But I think that's going to be the most important thing. If you go live 2 minutes earlier, then you'll be on time tomorrow. I need to start showing up on time just to shut everybody up who says I'm late. Dude, it'll be freaking 8:45 and 30 seconds. Like, I'm pressing the go live button and everyone's spamming late. I'm like, it's not even 8:46 yet. It's not even a minute late. You still have 30 seconds to wait before you spam late. So I think you guys just like that I'm late because you get to make fun of me for it, which is toxic. That's a toxic relationship, quite frankly. I need to speak to the manager of this establishment immediately. Oh my gosh. Look at that. I just got an email from her. Dude, she's been working. Got like 7 emails today of like, hey, you need to do this. You need to do this. Focus on this. Hey, we got this request. We got this request. This one is on the photographer person that reached out. I just feel more productive, bro. I just feel like I'm getting more. Like if I like that person who said, "Hey, Mid, can I be a photographer?" I would have probably said to email me and I never would have responded. Just because the day gets busy, dude. There's so much shit, and then you end up like forgetting about this stuff. And so it really, I mean, it's like just day one, I'm seeing a big difference in terms of shit getting done, which is important. Very, very important. Inorganic productivity like Salesforce. Oh my gosh. That's hilarious. That is freaking hilarious. No, bro, it's just like there's a lot of shit to get done for next year. Like there's a lot of stuff behind the scenes to get. It's just, I just want to focus on doing what I do best, which is doing the show and making content. And like to have to create content originally on X and these Substack articles that I'm trying to finish up, which I'm trying to take a lot more seriously next year. And then YouTube, and then actually pay attention to the markets so you know what to talk about when you go live. You have all the updates, and then try to operationalize and manage logistics of like the actual bit. Like it just became way too much, and it resulted in me honestly not being productive. So it was never a money thing. Like I think for the past year, I've had the money to be able to pay for help. It's more so a question of just like the right person to actually get this shit done. And so that's what we got to do now. Bro couldn't just stick only to YouTube. Dude, I love YouTube, but like it's important to diversify in any business, right? Also, you just want to have more reach and distribution. Like YouTube's amazing, but like, and YouTube is the best platform, but you got to have your seeds in different areas. And without it, you're held to one platform, you know? So it's like really important to have different ecosystems you're developing, and just overall increase the type of brand you're trying to get out there. What's the channel that makes YouTube clips of your show? There is, yeah, I think it's called Currently right now. This guy just does it for fun. I haven't watched his latest videos, but I mean, we could watch this together. I haven't watched this yet, but it's just, he tries to find just funny moments in the show. I don't even know what we're about to see, but let's pull it up. Let's see. Are you still holding grab leaps? Yes, I'm still holding grab leaps. I think this stock is stupidly trading in the low fives, potentially below 5. But yes, I'm still selling those or holding those leaps. So we'll be listening to AMD. Yeah, there you go. Comma Heartbreak says, we will kill you. See, I know. Like I experienced it 6 months ago. It was AMD earnings. We looked at the results. The stock was flat. I was like, all right, guys, let's talk about some headlines. And everyone was like, what do you mean headlines? You think there's a more important headline than AMD earnings? I was like, guys, well, we just looked at the results. It's like, no, but there's a call. It's like, why do we care about the call? And they're like, why do we care about the call? Did you just say, why do we care about listening to Lisa Su? And then your boy turned on the call and listened to it for an hour. ABBA
on the chart is, of course, after that huge OpenAI AMD deal, which, again, I know a lot of people have questions, myself included.
Back when AMD was $250. Look at that. NVIDIA was $199. Hood was $137. SoFi was $30. Oh my gosh. Grab was $576. That was like a month ago.
Where do they get the money from? I'm not going to ask that question because maybe Sam will get angry and tell me, if you don't want your shares, you can sell them. I will find you a buyer. Well, joke's on you, Sam. I don't have any shares to sell. So there you go.
You showed him, Neil. You showed him.
But yeah.
Dude, the funniest, there was a funny clip yet. I don't know which one it's in. There was a funny one with Jose. Do you remember the part where I can find it real quick. Jose made a joke about OpenAI and essentially this is it. I found it. Dude, this shit was the funniest shit ever with Jose. This shit was hilarious. Like a month ago.
OpenAI. Now, the thought process of OpenAI being from the streets pretty much and just going with everybody. Interesting. It's definitely interesting.
She's for the streets. She's for the streets, bro.
OpenAI having a bigger.
Do not go through OpenAI's Instagram story or Instagram DMs. You'll be disappointed. If you're dating OpenAI, don't go through her DMs, bro.
Be like, I got another 10 gigawatts for you here.
Bro, that shit was hilarious. I got another 10 gigawatts here for you. Yeah, I'm wearing the same orange hoodie as well. That shit was hilarious because it's so true. It's literally OpenAI just pimping themselves out to anyone who's willing to listen. Oh, Broadcom 10 gigawatts, NVIDIA 10 gigawatts, AMD 7 gigawatts. It's like none of this shit. There is no gigawatts. There's nothing. And every time on the earnings call, they're like, so what's going on with OpenAI? Every CEO is like, well, you know, we don't really have a definitive agreement yet. So yeah, we like them, but we don't really have anything confirmed yet. That shit was hilarious. we are all nerds laughing at that shit. Absolutely, we're all nerds laughing at it. The PayPal pump celebration with me and Adam was also hilarious. Every PayPal earnings, we make sure to watch that every time. All right, are we done? Are we done for the day? I don't think we have anything else too crazy to look at. I can't call Steve, dude. Steve's actually at work, but he's taking a couple days off this week, so he'll be on the show probably either Wednesday or Thursday. He has a bunch of these like required. Has everyone like taken? So if you work in a corporate job and you get PTO, have you taken all your days off yet? Because Steve has a lot of these days left, which is why he's taking so many days off. So put in the chat if you actually have these days or no. He also was just on CNBC. That's correct. So we can't get him on our show if he's on CNBC. Taking them all over the next 2 weeks. They pay me back for unused days. Okay, so not a lot of jobs do that. Not a lot of jobs actually pay you back for the unused days. So that's not something that happens every time. I have 10 vacation days left. I have none. Okay. I don't get any PTO. In fact, if I take a day off, all I get are freaking messages saying, where the hell are you? That's the worst thing about taking it. Like the actual worst thing about taking it, like I did on Monday. There is no just like, you can take off. It's just like people are upset. And I'm deeply humbled and appreciative of that because, it means that people want the show. But it also means you like, unless you have a good excuse, you're screwed. And the only excuse that works is you're sick. But then when you say you're sick, no one believes you. They're like, oh, you're just making this shit up. It's like, no, dude, I'm actually, and then you do a stream at night with a rapper and everyone's like, oh, you're sick, huh? It's like, no, but like I literally couldn't cancel that stream. And at least I had 10 hours to sleep before that stream. And then you say, oh, I think something caught my throat. And then you have like 15 Grindr comments. But like, that's the truth. That's why you're actually sick. Like, that's what comes with the job. Yeah, you guys need doctor documentation. It's like, I don't have doctor documentation. I feel like shit. Nope, you're lying. Yes, I agree. It does beat the hell out of no one caring. That is true. That's why I'm, joking about it here. But it's the give and takes of content creation, right? Like especially content creation that's in a routine. When you're live and you're in a routine, people are part of that routine. And so when you go away, it annoys a lot of people. But the one time you go away, that's why it's you can cherish like taking a day off, at least from my position. Like during Thanksgiving, when I think I took Wednesday and Sunday off, like I had that full week to just like relax. Like it was very, very good for a refresh. But if you're not sick, then there's not a good reason. Also, though, that's how it should be. Like, I mean, I don't know. This is not a type of career trajectory where you wake up one day and you say, I don't feel like doing it. Like, are there some days where I'm like tired or this or that? And like, yeah, sure. But like, I don't know. I just don't like that mentality. You just like, oh, I don't feel like doing it. Because it leads to easily falling into a rabbit hole of making excuses. And even when I worked my consulting job, I mean, dude, I remember one time, bro, it was raining heavy, like heavy raining in New Jersey. And I woke up, I used to work on Saturdays, got up at 8 a.m. I had to drive 60 miles, not in a Tesla, but in a Honda Civic. And I started driving because I'm like, all right, like it's raining, but still got to go to work. I get there, I'm at the parking lot, no one's there. I'm like, wait a second. I open the door to the office, go upstairs, no one's in the office. Like, wait a second. Next thing you know, my boss at the time, essentially my boss, was like, oh yeah, we closed the office for the day. We're doing it virtually. And I'm like, how was I supposed to know that? She pissed me. She said, oh, you didn't check our Instagram? I was like, wait, you thought I needed to check the Instagram page? Like you couldn't send a text message? Like just a simple text, hey, or just like an email, like something more professional? I had to check like I could not believe, and I think she realized how fucking stupid she sounded. And she was like, yeah, it's okay, you can just go back home. And I still went to work, but I got back home and I logged on virtually and I still fucking worked. Because like you still had 5 hours left during the day. But that's what I mean by work ethic. Like whatever I've done in life, there's been very little excuses, which is why if I do take a day off, legitimately, you guys should know that it's not that I just don't want to show up. That's just not my personality. I like genuinely probably am not feeling the best. But I cannot believe that. Has anyone had an experience like that? I have negative PTO. It's like you think you're doing the right thing, you're being responsible, you're showing your work ethic, and then you get hit with some nonsense. You didn't see our story. Yeah, dude, you didn't see our Instagram. I was like, in what world was I supposed to check the company Instagram? I remember it was heavy rain in Jersey, bro. Heavy freaking rain. You need to email us when you take a day off from it. Yes, that's what I need to do. I'm not preparing for multiple days off. Just last week, I actually really did get hit. Dude, next time I take a day off and I'm sick, I'm posting proof. Like, I'm like going to show the thermometer and show that I have a legit fever. But this time I didn't have an actual fever. Oh my gosh. Oh my gosh. Oh my gosh. Post the vomit. Dude, did I ever tell you guys when I was in college, I got so drunk once at a frat party. I think I told the story. I woke up the next morning and I woke up and I was on my stomach and I like, as my eyes woke up, I saw all the vomit on the floor. And I was like, bro, I didn't even remember throwing up that night. And the scary thing about that is if I was sleeping on my back, your boy would have been checked out. Your boy would have been checked out. There would be no market open or market close at that point. Somehow, thankfully, I was on my stomach. And I woke up and I was like, damn, I did not know I threw up that bad. You know what I drank that night? You know what I drank? This is going to take away my Indian card, but you know what I drank that night? That ruined it for me? And my big made me drink it. Black Label. Cannot drink Black Label. And I know it takes away my Indian card for saying that because I'm supposed to be okay with that. I cannot drink Black Label. Even over the weekend, we went to a family event and my uncle was like, do you want to drink? And I was like, no. And then next first thing he pulls out is Black Label. I'm like, definitely not drinking that. But he had Black Label. He had, I was like, dude, I'll take a Coke. That's it. I think maybe that experience in college is, I mean, I don't think that's the real reason I don't drink. The real reason is because I don't know how to drink. I don't like drinking. It's not a vice for me. But that experience in college, like getting that drunk that night, is probably like, no, I don't like it too much. Black Label, can't do it. I'd rather have a Shirley Temple. Dude, even at the Pouncer event, dude, they had an open bar. I was like, can I have a ginger ale? I asked for a Shirley Temple, though. They were like, every time I ask for a bartender, they get so like upset at me. It's like, what is this guy asking for a Shirley? I was like, do you have a Shirley Temple? They were like, no, we don't have a Shirley. I was like, can I just get a ginger ale? Whatever. It looked like they had some really nice drinks, but ginger ale. That was it. Best story is the mocktail. Dude, I legit thought a mocktail had alcohol in it. Do I have that mocktail clip? Yo, I just typed in a Mitt mocktail. What is it? There's a channel called a Mitt Mixology. Bro, hold on. We got to watch this. Okay, we can't do it with the freaking music, but a Mitt Mixology. All right, so there is another Amit that's out there who makes drinks. Is that a Shirley Temple? It looks like a Shirley Temple. Dude, I got to find this clip. Some of you guys probably haven't seen this one. Oh, ServiceNow CEO Bill McDermott was on. Did someone ever clip it on X? Wow. So this was the result. I typed in Amit mocktail on X, and this is what popped up. I'm really taking notes on put credit spreads on a Friday night. I need to learn how to drink alcohol. You know, I still have this notebook. I have not utilized put credit spreads as much as I should, but man, they are effective if you can really get the price targets right. I should be doing it more often, but I don't. Next time at Fort Lauderdale, you're here, you got to come by my bar. I got you. I'll get you speaking in cursive in no time. Oh my gosh. Okay, the handwriting is not that bad, okay? It's not horrible. Although I've never really had good handwriting. I don't know why. I don't know. I guess I just never had the best handwriting. But I've tried to get better, but I don't need to write that much anymore either. So I think I found the clip. I think I found it. Oh, I found it. I found it. All right, here it is. For those that haven't seen it, this is from March of 2025. Nvidia was $120 at this time. I bought as much as I could, but I should have told myself to buy more. But eventually we'll see. Michael says you're not hungover. Dude, I had one drink last night at the after party. This is the after party for those that didn't see it at Poucher. They have the most epic after party at the end of the VIPCon. I had one drink and it was a mocktail, bro. It basically tasted like a Shirley Temple without being a legit Shirley Temple. I did ask the guy for a Shirley Temple and he laughed at me. Why do they always laugh when I ask for a Shirley Temple? They always laugh. I don't know why they always laugh, but they always laugh. And he was like, no, but I can give you this mocktail. And I was like, all right, that's fine. This is the after party right here. This is the guy I asked. This guy. You can tell he's so pissed off that I asked him for a Shirley Temple. He's like, this motherfucker did not ask me for a Shirley freaking Temple. But they had the open bar. And yeah, it was dope, bro. It was super, super cool. And they have the band that performs. There's the band right there. How your that, bro? Yeah, but Nvidia. Hold on. Wait, there's no alcohol in mocktails? What? No, you guys are kidding me. I thought wait, hold on. I thought a mocktail was like a cocktail. And cocktails definitely have alcohol in them, right? Wait, so then why do they call it a mocktail? Is it like mocking a cocktail? And that's why it's a mock? Oh. Wait, so the mock means that there's no alcohol. So it's mocking a... Oh. Dude, I thought I was... Wait, then I didn't drink a single lick of alcohol yesterday. I thought the mocktail, I thought it was going to get me a little buzz. That's why I only had one of them. I was like, yeah, just one. I'm good for the night.
Dude, that guy was probably judging me so hard. Oh my God.
I really thought a mocktail had alcohol in it, dude. I was like, yeah, one for the night. I'm good. Just need one for today. That dude probably thought that I'm an idiot. But now I know what mocktails taste like. So, all right, I think that's it. I think we're done. Yeah, the beard, dude. I look so young without the beard in that pic, right? I look so young. All right, I think that's it. Do we have anything else? Shouldn't have anything too crazy. We'll see what happens tomorrow. This market, once again, is being a bit annoying, but it is what it is. On the daily recap, we'll talk a little bit more about kind of what's going on with this rotation trade. S&P basically flat after hours. SoFi still falling, looks like on this PayPal news. Hoodie, 114.80, down again below 150. Nebius down 1%. Iran just getting hit, down 3%. Tesla down a little bit after hours. Galaxy down 1%. Upstart down half. Broadcom continuing to fall 338, and then Palantir down a little bit as well. The overall S&P still somewhat intact. All right. I think the narrative of the day, or like the way to sum up the narrative of the day, is rotation from tech into financials and healthcare. We'll see if that rotation trade actually makes a meaningful dent in the overall performance of the index. And then last 2 weeks of the year, these are the 2 weeks where we've got to see some real performance for the markets to end up closing the way we think they can close, up to hopefully that 7,000 level. If not, then it is what it is. I also kind of like, the one thing I will say is if we end negative for the year, as in like, flat to down from these levels on the S&P, it does help us set up a stronger January run versus being at all-time highs, because then I think a lot of the upside ends up getting conflated into like, can this go higher? So, maybe there is an argument that we have some short-term pain to the end of December, but January is not that bad. All right, that's it. Thank you everybody for being here. We'll be back tomorrow. Daily recap will be out later, and then we'll be back tomorrow with the market open. All right, thank you everybody. Appreciate it. Have a great night. I'll see you guys tomorrow on the market open. Bye everybody. Have a good one.